So the market depth indicators were the one indicator today that would tell you, give you the best chance at shorting this market. There was not a lot of indicators or indication that the market would go down in advance. The market's been slowly going higher, pulling back a little bit, but then moving higher, slowly pulling back and moving higher. And you see these purples here starting to come in after noon. And so you see one wave here. Typically the blues mean to buy, and we typically like to use this indicator intraday on the E-mini S&P to buy the dips or to confirm long trades. And so even if you use this to say, this was not a good day to hold longs, you could have done that with these purple indicators. There were 3 waves here between about 12 noon and about 13:15, about 45 minutes before the FOMC minutes came out. And then you see this fast move here. It's about 50 plus points in 18 minutes or so. Less than 20 minutes, you're going 50 points. So absolutely insane. And then a 40 point bounce back and then back down. And so pretty interesting price action. And most of my stuff was taken the long side, as it should, based on what the market was telling us. And let's look at the market internals. VIX spiked a little bit, but there's lots of mean reversion in this market, and that could be a good way to buy the dip. Take a look at the new 52-week highs, new highs minus lows, and it's at highs to plus 256, and so the market sold off, but this is at highs. The NYC tick sold off, but minus 1400. That's not surprising on a Fed meeting. The advanced decline line spiked below minus 1000, then came all the way back to 0. Something you would expect in a FOMC, and so just a bigger than normal sell-off, and it's really hard to trade this market, in my opinion. And let's just take a look. Say, for example, tick count trend 2. It's buying it all the way down, and tick count trend 2 1 minute did the same thing, and so ES Night Trader also got stopped out. In general, July was just a very, very tough month. There's not a lot going on. Let's take a look at this price action is not that trendy. If you look at this day, this day. So you're sideways a lot of days, and then all of a sudden, boom, 50 points in 20 minutes, 40 points bounce back, and then it just kind of settles in here. And so continue to get these no movement days like this, and then some more. You get a gap down with a quick mean reversion, and then no movement, and then bam. Out of the blue, not completely out of the blue because of FOMC minutes, but don't typically see that kind of price action. And the market sold off because a statement by the Fed Chairman Powell, we're cutting rates, but it's not the new trend. The market wanted the Fed to say that we're going to continue to cut rates, and so this continues to be this game of chicken. Wall Street's going to sell stocks until the Fed promises to cut rates again. Then it'll go higher, and then if the Fed doesn't continue to cut rates, then stocks tend to pull back. And so it's kind of a game of chicken, because you can go to negative interest rates, but we're not that far from zero, and the stock market's near all-time highs, and so it's tricky market scenario. I don't really care for it. I don't care for the artificial stimulus of the Fed's balance sheet and lower than normal interest rates than we've ever seen. And so a lot of tough. This is a tough month. July was a tough trading month. Hard to trade. Let's take a look at the gold strategies. We had some long-only gold strategies, and those still lost. And so here is the beginning of July right here. And so ran up and then pulled back and ran up. And so a lot of losses in here. Gold seems to want to go higher, but really in July it didn't really do much. It's kind of a sideways. We're going to go up and then it pulls back. We're going to go up and then it pulls back. Several times, like 5, 6, 7 times in a row. Now it's done that, and traditionally this is a good strategy. So I don't think it continue. Markets don't typically tend to hem and haw, and I like to see the beginning of a new month sometimes is a complete. The market does a complete personality change. Here's Gold Flash again. It used to not take trades for several months, and now. It's taken several trades in one day. Just got stopped out twice, hit the profit target once, exit at the end of the day. And so here we are taking these long only trades, and gold is fighting against us. It's as if it wants to go up, but it doesn't want to take any traders with it, and so it's going to keep, fighting that, as if it's fighting its own trend. It's hard to trade this type of market, and July has become a typical summer month where very sporadic price action. So I'm looking forward to August, which starts tomorrow, and so get a fresh start in August, as July was a down month. And so let's take a look at the reports. So here's the performance summary for the stock index portfolio. Similar story for a lot of the portfolios, just a down month across the board. I'll take a look at the performance summary. You see the red line indicates a drawdown, and it's been in these drawdowns before, and so good time to get in, or if you're with it and you sell here, or if you get out here, if you stop here, you're getting out at a time when it's been here before, and so you have to prepare for this, and you don't want to get out in the middle of a normal drawdown once you're committed, because if it rebounds, then you missed it. And so that's the performance summary. I've clicked on this, and it takes a little time to calculate, and so waiting for that to calculate. So here's the performance summary. The report 674,000. This is back to 2007. Again, here is the drawdown. Let's look at the periodical analysis. Let's look at the monthly period analysis. And you see what happens here is, you had a May that did this after a big October, November, December, January, February, March, April, then a rough May, then a good June, and then a tough July. Not too bad compared to May, but look back here. It's done this before. There's 4 pretty rough months in a row. Actually, if you're trading in this time frame, if you're trading in March of 2016, you're feeling pretty good. But by October, you're thinking, what am I doing? Should I change my strategy? So you stop at the end of October, and then boom, you get a 12-month run. And so this is what I want to avoid. Want you to avoid is getting out during a drawdown as it turns. And so I like the concept of the market's changing personality on a monthly basis. And so I'm looking forward to August starting tomorrow, and recommend getting in on these drawdowns and being aggressive about it. Here is the drawdown curve, the red at the bottom, and this is what we're doing with the stock index portfolio. Again, you can trade these with the micros, cut everything into 1/10 of the size. And let's look at the annual period analysis. This is inclusive of $25 round turn slippage and commission. And so, for example, 2018, if you cut it into tenths, you're talking 22,000. 2017, you're talking 4,200, 4,700, 7,500, and this would be on a $25,000 account. 2019 would be up 5,000 so far, and so 2019 is actually doing pretty good compared to previous months. And I'm talking about, the reason I'm talking about cutting this into tenths is I'm talking about trading the micros on the stock index futures. And so micro contracts are 1/10 the size, and the stock index portfolio is E-mini NASDAQ, E-mini S&P. So this is what to trade for. If you want to trade stock indexes and you want to trade micros, you can trade this. You can trade the full. And this is what to trade going forward for 2019 August. We have 5 months left in the year, and so I like this entry point right here. All the other portfolios are in similar places, 200K, million, and so I recommend those portfolios as well, because they're in a cyclical drawdown, and July was just a really weird month. And so that is the update. And all right, let me know if you have any questions.